All right, guys, it is 5 o'clock here. Futures markets are about to reopen. I just want to start off with what we have for our news events. Friday, February 28th, tomorrow morning, we have CPI and PMI numbers at 9:45. The expected is 46.1. Anything below 50 is considered a contraction. We also have personal spending and core price index for the US dollar. And then that is it mainly for the bigger news events. There is University of Michigan consumer sentiment. But really, outside of that, what's generally going on in the markets is absolutely absurd right now. And we need to be prepared for the possibilities of a panic bottom moving into tomorrow. This is probably the first day that I think retail investors are starting to get seriously worried after a day like that. We were down 5% in the Nasdaq, pretty incredible move. Let's start off with our bonds. I'm just going to go over the higher time frame targets in the bonds. Bonds have a 173 profit target from the halfway back that really the last touch was the first day of the year, and we have been absolutely ripping since for the bonds, which is bond markets tell the history or the future of the market, and that is more interest rate cuts. The Fed has run out of options, and they're going to have to cut rates again. So that sends CB, the 30-year bond, into the 173 target. There is an hourly extension we went over here today. We had our halfway backs trade, and those have upside targets that lead us through the highs and 169. ZN is the same setup. We had our same anchor new high that I went over this morning from the second to high, February 2nd high to high. Our upside targets in ZN are 134. Absolutely monster move here in bonds and notes. Here's the VIX. The VIX is going straight up, and this is really when you start to see panic. I want to go out to a weekly chart and talk about some of the bigger VIX runs we've had. We have these trend lines in the VIX, and then they basically explode, and then we build another trend line, and then we explode. We have just broken out of, there's a couple different ways to draw it, but we have broken out of a trend line in the VIX that has existed since 2018. This is just a massive wedge. The VIX absolutely exploded in February of 2018, at the beginning of February. And here we are 2 years later, and the VIX is once again absolutely exploding higher here. And that's really when you start to see panic in the markets. And panic creates opportunities. We'll have to be careful choosing where those opportunities are. We are in a downtrend, and we have no way to predict what support we end up falling down into. There is no way to know where the bottom is. We can have levels that we anticipate, but there's no way to know. We had this extension from 1755 to high once, twice, 3 times, 4 times, 5 times. Here was the 6th time. And then what we ended up holding today was the halfway back long from Wednesday's low to high. Okay, that's what we held here today. And that was a retest. Sorry, that was this morning. We held that halfway back long. We completed profit targets. We had our next halfway back long. There is an extension now in the VIX from the high of the 25th to high, and the indexes will continue to be bearish unless that breaks. We will continue to, but still within sight of this, we can have an absolutely massive range. We can fall all the way back down to 25.17 and still rally. We have completed the negative 61 of the extension that traded on Wednesday, and the next higher time frame daily setup here in the VIX is the extension. We are bearish in the indexes above 2470. The trend will remain. Now, we can still rally 100 points off the low. We rallied 100 points in the S&P off the low and still sold off. We rallied 100 points off the low and then sold off 100 plus points to make a new low today. So it just goes to show the ranges inside of this market are continuing to get bigger and bigger. And with that, rallies will get bigger and sell-offs will get bigger. Going into the end of the day, the current sequence, we had a halfway back long here. And then that blew out into an extension. So we have a same anchor new high. This is the most aggressive sequence that we have now in the VIX. And that is, I'm going to get rid of this. That is a bullish above 25.95. Bullish above 25.95. And the VIX could continue up to these profit targets, maybe even the negative 61 at 28.50 before we see a larger time frame reversal. Moving on to the S&P, we had extensions all week long from the low of 32.89 to low here once, twice. We were in a downtrend this whole time. We were never in a long trend. And then finally on Wednesday we traded that again. We completed those negative 61 here at the end of the day. So the setup right now in the S&P, the daily setup to continue our trend straight down is from that low from Wednesday to low. And we are bearish below 30.31.5. Above 30.31.5, we would begin a short squeeze. But at this point in time, with this big of a sell-off, guys, the full 50% retracement short is now in play for the first time really in years. You could even say a decade. And that's why I want to go back, because this is really important. I'm going to go to a 20-year monthly chart. The last time we had this big of a short setup was 2008. And that was the high of 2008. Now, this sell-off is much more aggressive than the sell-off in 2008 as far as like the speed at which we sold off. Officially this week, we have the fastest 10% correction in the history of the market. So that's not normal by any means. And the last time we set up with a halfway back short that had, this significant of a target, and it hasn't traded yet. It will trade at some point. I don't know when, but if we rally to that full halfway back short, that's where the short squeeze would eventually lead to. That might be months from now. It might be a few days from now. That halfway back short is literally where we were yesterday at highs. And that is a 31.66. This is very important moving forward to the rest of the year. This is very important moving forward to the rest of the year as to, can we get above this short? Because if we cannot get above this short, we have an entirely different regime in the market that we haven't seen in a decade. And I don't really mean to scare anybody, but I'm following price, and that is what price is saying. Okay, so this is a very significant level when we get to it. Before we get to it, I do think we could fall lower. I want to talk about the sequence that ended up holding today. We did not come into this extension. Okay, this was the extension that traded on Wednesday. That same anchor new low was what I was looking for here today. We didn't come into it. Instead, we sold off in a more aggressive sequence, and we have began an entirely separate sequence. And it was a halfway back long, or halfway back short from Wednesday's high to low. Just like the VIX bid off the lows of Wednesday, it bid off the lows of Wednesday to high, and that created our sell-off. The S&P got offered at the halfway back short from Wednesday's high. Now, that was, you can draw 50 different draws and all sorts of different fibs. But what confirmed that downtrend in that setup was when we broke out of our long, we immediately set up in a short. And that was really the only entry. If you got short this, good for you. That was a potential entry. We went straight down through targets. Going into tomorrow, we have blown through this negative 23% profit target. Our most aggressive setup is the low from Thursday to low right now. And we are on the most aggressive bearish setup. We do not see a break of shorts unless we get above 29.78. There is no break of shorts. This morning, there was a break of the smaller time frame sequence. We had extensions from the low of Wednesday to low. They traded first thing in the morning. We completed profit targets. Same anchor new low broke, and we had a halfway back long that rallied. That rallied, stalled, and that's what created our top. It'll be the same situation moving into tomorrow off of this. If we break this extension, there'll be a halfway back long to buy. If we break this extension, there'll be a halfway back long to buy. But right now, we are bearish below 29.78, and I just want to back out to the weekly chart. The last time we had a sell-off that was this massive, first off, this is way faster than what we have ever seen. This is the fastest sell-off we have ever seen, ever. Okay? We have a 376-point range on the week, and that's not including from the gap down, and it's Thursday. Our lows of 2018 was the halfway back from basically the inauguration or the beginning of the Trump presidency to high. We completed those profit targets at the end of the year. At the end of the year, we completed those profit targets, and those were 32.17. So everything above 32.17, all this exuberation, market confidence, complacency is the reason you're seeing such a dramatic pullback, because we continued through those targets without getting a pullback, and now we're getting that pullback. So technically, and the only thing I would even consider in advance below us is 28.57, and that is 100 points below where we're currently trading, and we've been trading 100-point ranges every single day. So it would be to no surprise that this level trades tomorrow, and then the market reverses aggressively off that level. It would be to no surprise that we get down to 28.57 tomorrow. We may not. There is no way to know where we will bottom. We can only anticipate potential levels of supports and then look for short breaks. After short breaks, there's entries into trends. There's no need to jump on and pick a bottom. There was an example of that today. We had an extension short break. There was an entry into the trend. That entry stuck and ripped, but then it failed. We will have the same situation, whether it be overnight, tomorrow morning. We will need to break above 29.80 and then pull back. Okay? And then even if we break that, you could continue to use multiple variations. You could use Wednesday's low to low as well, but there is no setup unless we break the 61.8 long. We will continue to sell off, and like I said, possibly into 28.57. We started getting a little panicky here into close. This is an underwater close, and that'll be something to watch for tomorrow if we get back above that close. But right now, there's the absolute possibility that we end up 100 points lower before we bounce, which is down at 28.57. So either we're going to break above 29.78 and pull back, or we're going to continue going straight down into Friday's open. It's important to think about the context of what's going on right now. Obviously, you have the coronavirus, which is, at this point in time, very well could be considered a black swan event, an unpredictable event that is potentially changes the economics that we are currently living in. And then you also have the Super Tuesday primaries for the Democratic Party next week, where right now, and I'm not trying to get political by any means, but Bernie Sanders is leading the Democratic primary, and if he wins the Democratic primary, which pretty much the market, he will either win or lose based on all of the votes that come out on tomorrow, or on Tuesday, I should say, of next week. That is also scary, the market. So you have a confluence of events that is creating, on top of just a trend break, that is creating the fear of the markets here. All right, so just keep that in mind going into tomorrow and how we could easily end up down at 28.57. The Dow has come full halfway back from that 2018 low. It's amazing. it took us, see, we were down last at these levels in, was it August? So August, September, October, November, December, January, February, 7 months, and then we wiped it out in a week. We rallied for 7 months, and then we wiped it out in a single week. Pretty amazing. But we are now at the full 50% retracement from the low of 2018 to high in the Dow, which stuck in a front run the halfway backs from 2016, 2015. Okay? 2016, 2015. So we are at that level right now. If you go to this smaller time frame, we have the most aggressive sequence would be the low, just like the S&P, the low of today to low. That's the most aggressive sequence. Above that, there is still another sequence short where sellers will step in from Wednesday's low to low. Okay, we are really still bearish above or bearish below a 26,200, and that is that's a 700 point rally from here. We can rally 700 points in the Dow before we need to break our short setups and then pull back. So we could, I mean, like I said, the panic I think will happen tomorrow morning on the open where people are absolutely scared out of their minds about their portfolios. You know, this is the type of day where people go home to, you know, their spouses and talk about their retirement. This is really scary stuff. And at some point, you have to wonder if the Fed steps in. But, you know, if the Fed can stop the market from going down like everybody thinks they can, and that's why they've continued to cut rates, they couldn't stop it in 2008, and they couldn't stop it in 2000. So they couldn't stop the tech crash. They couldn't stop the housing crash. And this is just an everything bubble. Everything's inflated. Housing prices, bonds, stocks, everything is inflated, really, except gold and silver. And I honestly think those are the only safe investments right now. Moving on to the Nasdaq. The Nasdaq is the furthest away from that full halfway back from the 2018 low. It is the furthest away from that level. Okay? That level is all the way down at 77.91. Now, the halfway back for the year held in the Nasdaq, the low of 2019 to high came into play to the tick in August. And that's what we ripped out of. That same low of 2019 to high is below us, and it lines up with the current negative 61 of this draw. Okay, that lines up with the current negative 61 of this draw. But like I said, guys, we can rally so hard. We can rally 150 points and still be in a bearish setup. We can rally 150 points and still be in a bearish setup. The negative 61.8% completion in the Nasdaq is going to be down here at 8209. There is no reason to use anything but an hourly chart. Do not zoom in on the 5-minute. That is totally irrelevant. It is totally irrelevant to our major trends, and our trends are major. We traded 97.63 last Wednesday night. We are down 1,400 points in 5 trading days in the Nasdaq. 1,400 points. That is a decline from the high to the current low of basically 15%. So we've dropped 15% in 5 days. This is unbelievable. Unbelievable. Moving on to oil. Oil's crashing as well. Oil crashed in 2008. Go back. I mean, I'm going to have to go. It's kind of crazy. I got to go to a 20-year chart to really view last time we had this type. Goldman called for a $140 target, and then they called for a $35 target. They hit them both. It's pretty amazing. But oil, you know, there are these massive higher time frame shorts in oil that have traded. Oil could easily go back to the bottom of our historical range, which is like 33. And, you know, these things take time. This is a multi-year chart. This is going back to 2000. This is a 20-year chart. But on the smaller time frame and the relevant time frame for us, oil is bearish below 48. Oil is bearish below 48, and then even if we rallied, we'd have a full halfway back short at 50.28, and that would just be another short setup. So bearish below 48. If we break 48, the next resistance that I have is 50.28. And we have completed the targets I was calling for on Monday, which is 46.50 or 46.48. We've been calling for those targets from Thursday. Oil has sold off almost $10 from that high. In fact, it's come it's about a $9 sell-off. So it's $9,000 per contract. Once again, incredible, unprecedented moves. Here's the currencies. This is the USDJPY. And once again, massive setup. We have a monthly halfway back short that had a failed breakout. Failed breakout retest, complete rejection. This has targets all the way back down to the lows of 2016 at 101.40. Look at the weekly chart. We're going to break this uptrend line that we've been holding since the lows. And you can notice, when did the yen start rallying? This looks just like the indexes. It started rallying when the indexes started rallying in August. When did it top? It topped with the indexes. The yen follows the indexes. And if the yen breaks this trend line and heads down towards its target, that's bad news for the indexes. What are our setups right now? Our setups are currently an extension from the low of 111.21 to low. We completed that profit target just here in the after hours. The same anchor new low, 38% retracement, is a 110.04. And the 50 is 110.26. Those are your two resistance levels in the yen. And like I said, they can rally, the yen can rally 40 pips here and then go straight down to this target. From that entry to the target is 113 pips. These are huge, huge setups. The USDCAD has had a daily breakout today. Once again, you're seeing major moves in major currencies. We have been inside of, and every asset class is having a significant move right now. That's how you know there's something bigger going on here. We had this trend line, and you can draw it a couple of different ways, but basically it's a giant flag, and we broke out of it yesterday, and I mentioned that in the chat room. We've completed upside targets here. We have a daily extension. We have the possibility of beginning daily extensions from the high of the 10th to high. And there's your pullback. The 50% at 133.61. The 38.2 is 133.68. Euro has come into, it'll be interesting to see what happens, the full 50% retracement short for the year. The euro got absolutely destroyed. The low is on the 20th. Where is that low from? The low is from a gap fill that goes back to 2016. We fill the gap. The euro rallies straight up 300 pips into a halfway back short for the year. This is a significant resistance level, and it confirms its resistance by breaking out of and down through 109.45. 109.45. It is still in bullish setups, running into a higher time frame short. Gold, let's not forget, gold is the best looking long chart we have right now. It has an upside target of 23.17. There's no upside targets right now in the markets. There's none. There is one in gold. We've confirmed that upside target by breaking our short. This target goes back 20 years. This target goes back 20 years. And honestly, if we break out of this high in gold, we're probably going a lot further than 23.17. The Fed has printed so much money right now that the only way out is to print money. This halfway back long is from the low of 2001 to high. Look at this run coming out of 2008. as they printed their way. Okay, we went from 684 to 1900, basically tripling in price. What happens if we triple in price from this pullback? You're talking 3,000. Okay? If we triple in price, you're talking 3,000. Gold is one of our few markets, asset classes, that has valid long setups right now. We have an extension from 1566.2 to high. For sure we can consolidate in here, but we continue to be bullish above 1614. On the hourly chart, we have retested the first setup. The first setup long here in GC after the double bottom was a halfway back long at 1640s. 1639.4 to be exact. We retested that support level, and what the bulls would like to see is a break of the short and then an entry again into the long trend. But the higher time frame, we could continue to consolidate here in gold. I don't know if it's just going to rip out to the moon tomorrow, but when things get scary, gold goes up. When things get scary, gold goes up. People don't know where to put their money. Gold is a hard asset class. It's a hard asset. Everything else is just fake money. All right? We had the low, too high, complete. There is technically a next measured move here on the 5-minute chart at 1646. There is a next measured move at 1646. Silver, also extremely interesting. Let's go out to the weekly chart. We rolled our futures contract in silver. Silver has a massive halfway back long, and you can draw it from the low of 2018. You could draw it from the low of 2019. They had buyers on both levels. That upside target in silver, come here, is at 21, which brings us back to the highs we were at in 2016. Now, we broke out of our shorts, which confirms those targets, and now futures rolled in silver the other day. Well, after the roll, what happens? When futures roll, that means people have to get rid of their old contracts and jump into the new contract. So we're now in the May contract. That's why we retested this support, so the professionals could get their fill again. We came down, we retested this level, and there's already been a reaction off of it here in the after hours. Let's take a look at the series down. All day we saw selling. Halfway back to target. Halfway back to target. Halfway back to target. Halfway back to target into the end of the day. And then as soon as the market opened, we've broken trend. We've broken trend. Let's go down to a 5-minute chart. Once we break trend, what do programs do? They just flip. Okay, and you can actually see this halfway back here was aggressively front run. And then we had our next measured move complete. We have a low of the day to high of the day. Silver and gold are the only asset classes, and I'm not talking about currencies. There are currencies that are trending up too. The indexes clearly are not, and they are not safe to buy. Silver and gold are the only markets that have significant upside profit targets from where we currently are. The rest of these indexes are going to have rallies, right? Like, you don't sell off this heavy without having a rally. But moving forward in all of these indexes, the halfway back short for the first time in a decade on a higher time frame. We've had smaller halfway back shorts, like here's one to target. Professionals are going to hedge. Every single institution hedge fund that knows what they're doing is going to be selling into that short when it trades. So we have some pretty incredible times ahead of us. I'll be updating you guys obviously on a daily basis of where the markets are located relative to their trends so we can map them out and continue to stay on the right side in the right direction of the trend. But things change quickly, and this week in general is a great example of how fast things can change. For anybody who's in the trade room this week or part of my program, we were on the right side of the market pretty much all week. And I don't mean to say that to brag. I just mean that in a sense that these markets are controlled by computer algorithms, and it's important to understand that you will always have an entry into the trend and there's no reason to chase. We just provided that next short entry that I talked about at 29.70 half, and we're already almost, we're 7 points off of it. But these are the only safe trades. Everything else is just guessing. Okay, we just traded that new extension, and now we have another downside target of 29.18. We'll see where we're at in the morning. I'll be at the desk pretty early, probably wake up for the European Open. I'll be doing a video tomorrow morning to go over everything like I do every morning. But that's going to wrap up this video. I'll share my levels with everyone in my trade room. For those of you guys who are not in my trade room, I recommend you join it. The link is below. I also have a link to some simple courses if you're new to the market and you want to learn more. But we are entering historical times, and now's the time to learn. But anyways, if you enjoyed this video, give it a thumbs up. Feel free to share it with anybody who you think might find this information valuable. Take care, and I'll catch you guys tomorrow morning.